Hello, good evening. Welcome to Business Now, your go-to show for deep insights into our evolving financial landscape and the important topics. This week, we delve into food value chains and their struggle with market access, explore how tech is boosting financial inclusion, and bring you exclusive conversations with top chief executives on their race to the top. Plus, did you know that the majority of people do not read loan agreements? So stay tuned as we kick off Business Now, all just in over 20 minutes. Let's dive in.
Next 3 to 5 years, the smartphone penetration will grow significantly in this country.
Malcolm, when someone comes for money, it is like when you have a toothache. The moment you get a toothache, the only thing that comes to your mind is where is the nearest hospital. So someone does not ask even about the interest rate. All he wants is where is the nearest lender that can help me.
This week we discuss the telecom business, who is doing what, and the future of 5G technology. We also touch on food security and production. Plus, did you know that a positive credit report can improve your chances of a loan approval? Let's now take a look at today's top stories. And on Saturday, Uganda signed an oil refinery agreement with UAE Best Alpha MBM Investments, granting them 60% stake in the crude oil refinery in Kabale, Hoima district. The national oil company will retain the remaining 40% stake in the 60,000 barrel per day refinery, as according to a statement sent by NTV Business Now. Discussions on key commercial terms between the Uganda government and Alpha MBM Investments began on January 16th and were expected to conclude within 3 months, and that's according to sources. From oil and gas on to Uganda Securities Exchange Executive Director Paul Bwiso, who has been appointed chairman of the East African Securities Exchanges Association. His new assignment is to oversee the development of financial products aligned with the regional integration agenda, starting with a regional index approved by the Executive Committee on Friday, March 21st, 2025. So the East African Securities Exchange Association held its 34th consultative meeting at the Dar es Salaam Stock Exchange. This is what happened. This meeting was attended by principals of stock exchanges across the East African region, including representatives from the Rwanda Stock Exchange, Nairobi Stock Exchange, Dar es Salaam Stock Exchange, and the Somali Stock Exchange. Surprised? AP Mola Masak has warned that the proposed emissions trading scheme for the shipping industry, intended to bring the price gap between fossil fuels and green energy, may instead encourage greater reliance on LNG, that's liquefied natural gas. And these measures will be discussed at a crucial talks by the United Nations International Maritime Organization next month. Plans to impose economic costs on shipping pollution have divided the industry, with some favoring a complex credit trading system over a flat levy on each ton of emissions. And we sit down with the new Airtel managing director to discuss telecoms, 5G investments, and the infrastructure sharing plan recently announced with MTN. We cannot talk about economic growth without talking about key sectors of the economy that enable that growth. The telecom sector is one of the fulcrums of economic growth. The services are powered by telecoms, the internet, speaking of voice, speaking of data, all that is powered by telecoms. And that is the transformative power of economic growth. Today, we speak to Sumendra Sahu, the managing director of Airtel Uganda. He's just a few days in office. Okay, let's say a dozen months in office. You're welcome, sir. Thank you very much for joining us.
Thank you, Mr. Malcolm.
Great.
Thank you.
Welcome to Business Now.
Thank you.
The telecom market is always vibrant, you know, and waiting for new things. We really believe Airtel is always bringing on board new things.
Right.
The most recent one is the infrastructure, you know, sharing that I have seen in the news. But first things first, talk to us about the state of affairs. What has been your observation of how this market is in terms of telecom services?
Thank you, Mr. Malcolm. I have just, like I mentioned, I've just completed my first 100 days in Uganda, and my experience in Uganda has been incredible, I must say. First of all, I would like to thank the entire Airtel Uganda team, and all my partners, extended partners, all the stakeholders, I think for the warm welcome and the support what they've extended to me. Coming to the Uganda market, I think what I observed, this country is doing really, really well. If we see the GDP growth is almost for last 6 to 7 quarters, it is growing at around 5.7% to 6.7%. That's that's a kind of growth what we are witnessing. Inflation is like between 3.3 to 3.7%, and more importantly, the currency, I think it's very, very stable. In fact, this is one of the currency which is actually appreciated by 2.7% if you see in last 1 year. So I think the market is very, very promising, exciting, and I'm very, very excited that this market will grow exponentially in future.
You come at a critical time when Airtel has, not so long ago listed on the stock exchange. It caused excitement. It's been one of, I think, to be fair enough, best performing counters, joining, the likes of Stanbic Umeme and all the others that have been performing well at the stock market. What is your expectation going forward? It's really looking good, isn't it?
Yes. So, like I mentioned, last year, in fact, the year what we ended in the December 24, I think has been really, really great for us. And the results clearly it shows that we have done well overall, and even more importantly, the data, which is the future category. I would always say data is the business of the future, and we have done very well in data business. And coming to overall performance of the company, I think not just revenue, even profitability wise also we have grown, and the kind of dividend what we have given to our shareholders are also much better than the expectation. And we are quite hopeful and very confident that the coming year, which is a year that started, we will be doing much better.
Great. But I mean, this is just a market of two elephants, if I may use that imagery, two large, best performers in the market, speaking. But what would you say are your areas of strength that will impress Ugandans who have interests in the stock, or even existing shareholders?
Currently, if you see data to overall business is around 40 to 45% for the industry, and for us it is almost like we are touching at 45%. And the best part is this is a business, this is a category which will grow exponentially. Next 3 to 5 years, the smartphone penetration will grow significantly in this country, and we know this, so that's why our investment, particularly on data, will be always much higher than any other thing. So if you see in last 1 year also, we invested almost 165 4G sites, 150 5G sites in just 1 year, and we are going to expand more even in this year.
Let's talk 5G.
Yes.
We've seen a lot of talk, from telecoms who are installing 5G, etc. Other markets are talking about 6G, etc.
Yes.
When are we going to get there? Where is it that people are not seeing it on their phones? When is this infrastructure really starting to work really properly? We have also seen partnerships between you and the other players, to share infrastructure. And I believe a lot of investments are going into that area as well. What are you trying to achieve that hasn't been achieved yet?
So first of all, Mr. Malcolm, 5G, I think,
is 5G
obviously
here yet?
Obviously, that's the future. There is no doubt about that. But unfortunately, if you see the current mobile penetration on mobile side, the 5G penetration is very, very low. And believe me, as and when the 5G mobile penetration will increase, and wherever it increases, we will convert those sites into 5G sites.
Will I, in my lifetime, see 5G and use it?
Yes.
before I die?
Yes, 100%. 100%. I think is like in Kampala also, if you see in Kampala, mostly I think 85 to 90% of our geography has having 5G network.
Mr. Somendra Sau, thank you very much.
Thank you, Mr. Mazhar.
The world today continues to battle food insecurity amid these tough climate conditions. Meanwhile, smallholder farmers are striving to protect their crops and earn a living. Yet yields are declining and markets remain inaccessible. We spoke to Ms. Birungi Korutaro, Executive Director of Kelimo Trust, whose organization promotes sustainable development, environmental conservation, and food security across the East African region. According to Kelimo Trust's latest report, over 51% of farmers in Kenya and Uganda have adopted sustainable price practices, resulting in a remarkable 49% increase in rice yields with pilot areas.
We see a lot of inefficiencies in the value chains, especially the food value chains, because they are largely unstructured. A lot of information asymmetry exists in those value chains. For instance, farmers produce, but they don't know who the buyers are. They do not know where to get the inputs from. They do not know what the consumer wants. If we look at the example of Kenya, in tomatoes that is making headlines, they do not know what variety of tomato to plant that the consumer wants. And even after you've planted, they do not know who to sell to. So we largely have very unstructured value chains, and therefore those inefficiencies come about, and then the value chain actors, whether it is the farmers or the processors, are disadvantaged in terms of profits that they can gain. Instead, you have those that we could call as predators that take advantage of this information asymmetry to make abnormal profits, while the others are making losses. When we are producing small quantities inefficiently, we can't compete with other imports. And that's why others that are more organized can take advantage of the price differential here and supply our consumers. Our consumers also in the urban areas want better packaging. They want information on that packaging. Our young population wants this food available on digital platforms. They do not want to go to our traditional markets. They also want food that has a long shelf life. And all those preferences need to be factored in by the farmers. We have seen that countries that have organized themselves have better coordination at a country level, and also take advantage of specialization, have been able to produce for their consumers, create jobs for their youth population, and also take advantage of this to ensure that the environment is well protected. Because when you take advantage of the production in specialized areas, you do have little impact on the soil. In terms of soil health, we have seen that the crops grow better in areas where you have specialized and that are agroecologically suitable. So when we have production, in the case of Uganda, where every farmer is producing 1 or 2 or 3 different crops, whatever they want to produce is what they produce, mixed messages on who should produce what, where and how, then we can't take advantage of economies of scale. And that really disadvantages the farmer, because they are not able to produce, to get inputs at lower prices, and to take advantage of cooperative and collective market.
This week, financial literacy is the thing. We examine the money lending market, who is participating, and how the relationship between lenders and borrowers has evolved. This follows the government's decision to set a 2.8% interest rate cap, a move many lenders are protesting, arguing that it contradicts free market principles. About the current state of affairs. Talk to us briefly in the last few years that we have, because businesses in this country really struggle with capital. And when we speak capital, we talk about banks, and then there's a sector which you belong to. What has been the contribution of the moneylenders group, to helping business activity really thrive?
Thank you so much, Malcolm, for having me. Quick to know, I like numbers, and I usually want to refer to numbers. Truth be told is that over 84% of our business sector is informal. Now, of that, 70% of those is banked. So that means that these guys, at a certain point, they will need money. They will need money to scale up their businesses. They will need money to import their consignments at the border posts. They will need money to clear taxes, URA. All these things need money. And also, it's important to take note that the average time or turnaround time for commercial banks and financial institutions that are at another level is on average probably 3 weeks to 1 month or even 3 months. Now imagine someone who is importing his consignments and the people on demand are waiting, the suppliers are waiting for the consignment to arrive. And all he needs is $15,000 or $10,000 to clear the consignment with taxes and then get to supply the suppliers. Imagine that person. He will not wait for 3 months. He will not wait for a month. He won't even wait for a week. So I would say that we are bridging the gap that cannot be bridged by the financial institutions and the commercial banks. So our existence does not only support the business people, the public, but also it supports the government.
And you speak about government. Government comes up with a rate cap, right? The motivation was that perhaps people in this business are reaping off businesses, the same businesses that you are supporting. And then there was a motivation to sort of cap the rates. I need to know, has there been a comfortable transition? And that came with also laws, Microfinance, TFO, and Moneylenders Act 2016. What has been the transition like?
Thank you, Malcolm. I must say that the transition, we are yet to accept it, because that's why we are still even engaging government, but also battling, filed a case as well on the same, because we are saying, look, the 2.8% cap that was put per month on lenders, we think it is far-fetched, it is not as grounded, but also we think it's not as well backed up with research and data. Why? Because, look, Malcolm, if you consider, cost of capital alone, if you're going to borrow from a commercial bank, because I think that some of the lenders, if not all, actually have borrowed money from the banks. So if commercial banks lend at 2% per month, which translates to 24% per annum, and then you come and cap me at 2.8% per month. And then you have to consider operational costs, you have to consider collection costs.
You said 2% per month, or 7%?
We are capped at 2.8% per month.
Capped at 2.8, yeah. And banks?
And banks lend on average on 2% per month. There are some that actually go to over 3%, even 4%, because per year some banks are at 36%, 33%, per annum on average 38, 40. So you can imagine, consider the cost of credit, consider that I'm borrowing to relent to other people, but also consider that we're serving a population that is informal, which the banks have said, you know what, we are sorry, we cannot risk with you. We used to have a black market, and people could lend for as high as 25%, 30%. The law is not the problem. The problem is how do we work with the lenders to make sure that we transition the informal lenders, we transition the guys who are not lending the right way to better lenders. Because if I've been acting informally, not registered, now could be the time to start engaging the association, engaging Uganda Microfinance Regulatory Authority. How do we then entice lenders? And that had happened. I tell you that at a certain point we had only 100 paid up lenders with who had registered with UMRA. But now we have over 1,500. Malcolm, when someone comes for money, it is like when you have a toothache. The moment you get a toothache, the only thing that comes to your mind is, where is the nearest hospital? So someone does not ask even about the interest rate. All he wants is, where is the nearest lender that can help me? Because I've given you an example. Someone has a consignment that is worth probably $500,000, or probably $100,000 US. And the only tax that he needs is $10,000. Do you ask yourself why even those guys in Chikubu have very expensive cars? Sometimes it's not that they are lavish or they are luxurious, because he knows that the moment he needs money, he can actually put this car across and get the amount that he needs. Quick money. At that point, all he needs, he doesn't care about your 10%. Why? Because, Malcolm, some businesses actually turn over 120% per month on one trade.
The reason I actually brought you on this show is deliberate, to talk about short-term capital and the challenges that lie therein. And I think some of the motivation behind introducing caps and introducing laws, and now the Microfinancial Regulatory Authority, trying to educate money lenders, make sure that some of them are formalized and stuff, put up your licenses, display interest rates and all that.
It's required in the law.
As the president of the Lenders Association, have you seen those things happening?
Yes, I must say that there's a bit of sanity happening, especially for members that have licenses from UMRA, but also for lenders that have signed up for the association, because there are those lenders that are still informal, huge number, and we're persuading them to actually come and formalize and register and get licenses. One of the requirements in the law is that you should actually display your license as you're giving out the loan. But also too is that your loan agreement has to be clear. It even has to have an attendant that even if I am not schooled, I cannot read, there has to be someone to actually interpret the things for me, and I sign somewhere that, look, the things that you read for me, I understood them, and I'm signing something I understand very well.
For purposes of education, what should our borrowers know? What should borrowers know when it comes to hidden costs?
It is important for the lender to actually explain the loan agreement to the client.
Is it your obligation to explain the loan agreement before someone takes your money?
I think
show them those hidden costs and say, there's this percentage, this is insurance, this is all that.
It is my obligation, because even the law tells me that all the costs that I'm charging should actually be stated in my loan agreement. Let me give you an example. Even when you go to a commercial bank, there are those small lettered words that you never read. One of the clauses in those dotted lines is, as inflation increases, so your loan shall be. And sometimes when you need money, you don't want to look at those things, because you know that the bank will not adjust it for your cause alone. They will not adjust the agreement for your cause alone. So you say, where can I sign? Most of the time people don't even read. But I must say that for the lenders, we have endeavored to educate our population.
What other things could even be related with policy that you're confronting that are holding back the growth of this institution?
The key thing that we need to talk about is that, to appreciate that lenders have a big cause, have a gap that they are bridging that cannot be bridged by financial institutions. So we need to embrace them and support them to grow. But also too is to know that capping them selectively amongst the many financial institutions is not fair at all. So we ought to actually listen to us, the lenders, and then see our cause and see how we can address it.
You have had stories of the high cost of doing business, or perhaps the high cost of borrowing, and people who can't even borrow money in the bank or in their financial institution where they subscribe. We are at New Grid Credit Reference Bureau today, a central bank approved institution. This is the work they do, and we're going to find the remedy. I'm going to meet David Opio Obwangamoy, the Chief Executive, the founder of New Grid Credit Reference Bureau. Thank you very much, David. Nice to meet you.
Nice to meet you, Marco.
But David, I need you to take us through the process. So first tell us, what is a credit report before you take us through the demonstration of how these reports are generated?
Thank you so much, Malcolm. We are New Grid, the third licensed credit reference bureau and the first indigenous reference bureau to be licensed by the central bank. In summary, a credit report basically shows the behavior of a borrower and in terms of borrowings, and banks or credit providers use the credit report to assess the potential, the risk associated with that particular potential borrower.
All right, so let's delve into it. So show us, David. Let's go ahead.
So we're going to use that big screen. So there are a couple of ways through which an institution can access your credit report. The most important thing, one, there must be a willing borrower, and that willing borrower must give consent to the financial institution to access their credit report or the data on the credit report. But also, there are customers that come to our office and put in a request to see how they behave, how they pay well their loans, to see their financial behavior history, which we put on a credit report. So the process is we'll go to our portal. This is our portal. It can be accessed by authorized users, but in this case I have logged in at David Opio, and we have a list of services. So you go under inquiries. Under inquiries, we have a credit score, we have a credit search, we have a KYC search, we have a financial card validation. So we continue to validate financial card for any borrowing that is tagged to a financial card. But in our case, we are going to use a NIN because it's now the primary key identifier which the central bank has approved. And then we have a NIN validation, which is a national identification number, and then a business validation for companies that have maybe a URSB number, and then a phone number validation. So I'm going to do a K credit search, and then under credit search I will do a new search. And we say that before you do a credit search on any potential borrower, make sure at the financial institution to acquire a customer's consent. So we can do an individual, this is for me and you, or we can do for non-individual, and this represents the institution. So we'll do an individual and a couple of identifiers. So in this case, I'll pick the country ID, which is the national ID. I'll punch in the number. So that is the NIN of the customer.
So that's why they say your national ID has all your data.
Exactly. It's your digital identity, your digital footprint. And maybe I can demonstrate if I don't tick this consent and I proceed.
It cannot give you nothing.
Yeah. Say that the client consent is flagged, so we can't proceed. So go back, click it, and then submit. And I've ticked it because the customer has actually signed on the physical consent. And then this data is coming from tier 1 to tier 3. Those are the institutions licensed by the central bank. We proceed to view the report. So this is how the report looks like. So I'm going to put it in the print view.
Your report is
yeah. So Mr. Migade, this is how your report looks like, and thank you for allowing the public to look at it.
So then, if we could shine the torch into what you have been doing, the percentage of people that you have noticed that are risky in this country.
I mean,
are people very risky?
Yes.
Because of these efforts, are we seeing more people now coming out to, try to know their credit history and stuff like that? Are people paying loans, microfinances in banks and all that?
We have discovered that people between the age of 18 to 25 has a higher default rate.
Next week on Business Now, we'll bring you the latest in Uganda's oil and gas sector and the journey towards commercialization. You can follow us on our social media platforms and subscribe to our YouTube channel for more updates. Follow us on X and Facebook as well.